Welcome back. This is Si Win Yi from the Real Estate Network, and today's topic: how landlords slash real estate investors can profit from this historic rental market, not just currently, but for decades to come. All right, so stay tuned. And by the way, towards the end, you're going to receive some very great exciting information. So if you stick it to the end, you will be rewarded. Also, by the end of this video, if you see value from this presentation, please smash the like button and subscribe to my YouTube channel. And you can also sign in on my website to become a new real estate free member of our community. Even though I have several thousand existing members already in my website to receive, and you guys are getting some great weekly newsletter on real estate investing. So without further ado, let me share my screen. Let's get to the point. I know you guys are very anxious to hear what I have to say. All right, so I'm just going to use the Redfin data that came out a few days ago as a validation of why I say what I say, that right now is the greatest time in history to become a landlord, a mom and pop landlord as you are, and also investor. So anyway, in case you have not heard, the rental market is very strong because of the skyrocketing of home prices during the pandemic boom, as well as the higher mortgage interest rate. Right now is hitting around 7% in the country, and that left many potential home buyers staying on the sideline. And furthermore, on a historical basis, even before the pandemic, there's a lot of people that are, for many reasons, are unable to become a homeowner, so they have to be relegated back into the rental pool. This means they have to rent. That is that's how it is. All right, so this Redfin update about the rental market tracker, not only the rent has gone up 7.8% in October 2022, but I'm just using this data just to validate and to confirm that the rental market will be very strong and behooves you as an investor, giving a lot of negative headlines going on. I don't have to remind you about inflation and potential for recession and all the some certain job loss situation and what have you. So look, I'm not going to dwell on it. Other people producing a lot of videos and talk about all this negativity around the real estate market, around the economy, and all those things. So I don't need to put that out, but I'm just gonna focus on, for those of you who are really want to become a landlord real estate investor right now, is clearly is the best time. When there's a crisis, there's an opportunity. And when everybody is fearful, you become greedy, if you will. That's what Warren Buffett, Warren Buffett, the greatest investor of all time, the legendary Warren Buffett. That's what he said. When everybody's greedy, when everybody's fearful, you need to be greedy. Greedy meaning in a good way, right? Greedy in that you need to achieve your definition of financial freedom through real estate investing, become a landlord. So anyway, let's go ahead and conclude this video, this article from Redfin. They talk about the tracking of rents. I'm not going to go over the major metro, which this article is mentioned. 11 metro have a slight decline in rents. We are going through the affordable market. We're not going through the big cities and big metros. So maybe I'll scroll down here. And of course, there are 11 major US metros have a slight decline of rents, but and there they are. I'm not going to go over the 11 names. You already see it. You can also get into Redfin, go over this data center yourself to look at this article. But I'm going to focus on where a mom and pop real estate investors, that's where you should buy your rental homes, and which is which we're talking about Midwest and South. Rents increase the most. The rents have been increasing quite dramatically over the past few years, not only the past few years, even before the pandemic. And I feel, as you know by now, right now, with the skyrocketing of home prices during the pandemic real estate boom, as well as the much higher mortgage rate of around 7%, that put a lot of people on the sidelines. And right now we are at a 40-year affordability home factor in terms of people able to buy a home. As a matter of fact, I did a video coming from the Redfin as well. Right now, to buy an average medium price of a home in the U.S., which is around 400,000, one would need around $100,000 of salary on an annual basis in order to afford a medium price of a home for 400 grand. So, needless to say, there are many potential homeowners and many people who rent for life. They could be staying in the rental pool for the foreseeable future, most likely very, very much longer. So I'm going to go out on a limb and say that the rental market will be very, very strong for decades to come. So as a real estate investor, you want to become a landlord, you over time, long term, you're going to find very good, high quality renters, and there'll be a bidding war. We're seeing bidding war for renters try to fight their way to rent a home in many parts of the country. So during the pandemic, we have like multiple offers to buy a home as a result of the historic low interest rate. Now, people are bidding to rent a homes as a result of lack of homes to rent. So many renters are entering the rental pool for the reason I just stated. And as a landlord, you're going to profit greatly. So, let me continue to share this data. So let me further go over the article here in Redfin, and the top 10 in rental increase: 31%, Oklahoma City, Raleigh 21%. All these double-digit rental rates in the top 10 cities, and there are many, many more cities and metros, affordable areas in the Midwest and the South. We see primary area for investors to target, which is not mentioned on this Redfin article. So, all right, so there are 400 metros in the U.S., and Redfin only highlight certain metros. So medium asking rents, as you can see, skyrocketing. I mean, will continue to do so, okay? Because the supply of homes to rent is very, very low, and the demand for renting is extremely high. The supply and demand, just like home purchase. Rental market is same thing, supply and demand, very extreme lack of supply of homes to rent, and too many renters are renting, so they are fighting tooth and nail to rent your nice home that hopefully you own. Okay, so again, I'm not gonna go over all these metros indicating what's the medium asking rent, right? But most of them are in the Midwest and the South, right? Atlanta, Austin, Alabama, and Ohio, Texas, Michigan, Florida, right? So okay, I'm not gonna go over the city by city. So at the end of the day, what you really need to know is that it is a truly a great time to become a landlord. And let me give you some proof. And I have took the liberty of I'm going to go through. I'm not going to give you a specific city of where to invest. Today is just a high level. I already told you the Midwest, the South, and Southeast. Okay, that's all you need to know for right now. But meanwhile, I'm going to share with you some amazing. What I've done is I have created a pro forma, what we call a cash flow analysis about a typical house, and look at the numbers, right? So time is very limited, so I cannot go over some of the metrics, but you can always access my other videos on my YouTube channel, and pick and choose to go some deep dive in terms of numerical formulas and all those kind of things. Up on the upper right hand corner, the rent to value ratio, the capitalization rate, cash on cash return, and total return on investment. So yeah, study on your own. But I took the liberty of identifying around 5 rental properties that, and I'm going to go over the numbers on in very, very high level, very simple explanation. You as a newbie out there can really benefit from hearing what I have to say. Some of these amazing returns. If you buy in the right market, you buy in an affordable market, and you just have to crunch the numbers. And if you can find yourself with a good team or good in-house property management, regardless of where you live in the country, it doesn't matter. You can buy passively, remotely, turnkey properties from great turnkey providers. They're located in a different part of the country, and these are type of homes they are promoting. And let's, without further ado, let's go over. This is a new construction located in Florida. That's all I'm going to say. Okay, some of you might have. Anyway, so new construction, 3-bedroom, 2-bath, 1,389 square foot. This price of this home in one of the fastest growing area in Florida, $246,000. You put 25% down payment, which is total out of pocket, not total out of pocket, 61,500 down payment plus closing costs of $4,000. Total out of pocket almost $67,000. You do 25% down payment, which is a benchmark, and you get a loan. Unfortunately, the loan is quite high. Is at 7.5% loan, right? It may not be at the bottom. You couldn't see, but 30-year fixed rate mortgage for investor around 7 to 7.5%. Don't worry about it. You have some options available to you, not now but later on. So, and you look at, okay, let me give you the benchmark rent to value ratio. Anytime you have a rent to value ratio of 0.6 to 1% or higher, then is a good rent to value ratio for positive cash flow at 20 to 25% down payment. Capitalization rate. Let me give you some benchmarks. So before you go any further, the benchmark is capitalization rate, upper right hand corner. The benchmark is around 5%. If you get higher capitalization rate than 5%, that means your cash flow is incrementally higher. Cash on cash returns at least 4%. That's fine. Total ROI with tax savings, 27, 30%, 40%. That is ideal. So the metrics is a very favorable. Again, I don't have time to go over the numerical metrics as I stated, because it'll take another 2 hours. Suffice to say, this property, new construction, is rented at 2,100, so it's almost 1% rent to value ratio. So that is the assumptions. Everything I'm using are assumptions, but they're real scenarios. They are approximation. The actual figures will be slightly off, but I'm giving you some realistic data. So $2,100 monthly rent in this great market here in Southwest Florida. I just giving you a little bit of hint. So very good number. So anyway, so $2,100 is a good benchmark, and then you minus your debt service, your property taxes, monthly insurance, as you can see, and then your mortgage payment. around 12.27 monthly. So all those debt service at the end of the day, and you're collecting $2,100 from a tenant. As a result, all your monthly mortgage and your taxes, insurance, and property management fee at 8%, what have you, and because you're collecting $2,100, you could have a positive monthly net cash flow of $249. So at least positive cash flow, right? So you're winning because you're gonna outsource your monthly debt service to someone called that tenant. The tenant is going to make you rich. That's the bottom line. Even with a high 7 to 7.5% interest rate, you can still cash flow. Guess what? I'm gonna use this term. It sounds like cheesy to some of you. Date the interest rate, marry the rental property. So next few years, if and when the interest rate, mortgage rate decrease to, let's say, 5.5%, guess what? You can easily refinance this rental property from the current 7 to 7.5 rate. And then what do you think the monthly cash flow is going to be? Instead of $249 right now, it's going to be around $500. And one more thing, it is expect you can raise your rent after a year, 2 years, whatever. So if you're collecting $2,100 now, you could collect $2,200 at a lower interest rate when you refinance. So your cash flow would be very robust, very, very attractive. And meanwhile, you will continue to your tenant can continue to pay down your 30-year fixed rate mortgage, principal pay down, inflation-induced debt destruction. Then you could get tax benefit. You can equity appreciation. Who knows, 3 to 5% year over year or more over time. And then you're using leverage. So it's a multi-dimensional asset class. We're talking single-family homes up to fourplex income property, that is. So yeah, you're getting paid 5 ways, right? Passive income, cash flow, tax benefits, equity appreciation, mortgage debt reduction, and what else? I mean, that's, what more can I say? All right, so any more questions on this first property? Let's go over to another property in Midwest. So you can potentially buy a $52,000 property in the Midwest and collect $600 rent, even if you pay 7.75% on your mortgage rate on a 30-year fixed rate mortgage. For a real estate investor, if you minus all the debt service monthly, right, you can see here, taxes, insurance, property management fee, all the maintenance costs, vacancy factor, and all the 7% maintenance percentage, because you're collecting $600 from a renter, you're still going to achieve positive cash flow, even though it's only $84. Hey, nevertheless, anytime you get a positive cash flow monthly, you are winning. Okay, this is only a first year cash flow projection. You have to go over the next 10 years or more of multiple benefits, as I stated earlier. Okay, and of course, once again, same scenario, the next few years, when and if the mortgage interest rate decreases, hopefully to around 5.5%, you can easily refinance this loan, and your cash flow will be a couple of $100 more, higher than you invest this property over time, at least 10 years. By that time, your mortgage debt will be substantially paid off by the tenant, and you can increase your rent, continue with the tax benefit, depreciation, tax deduction, put more money in your pocket, and also equity appreciation, compound interest growth, and your loan could get smaller and smaller. So the whole 9 yards, the whole ball of wax. So 55 grand property, only total out of pocket, including closing costs, is less than 20 grand. What a way to leverage your investment for achieve positive cash flow and long-term appreciation on this cookie cutter property. You can get financing, believe it or not, if you go to if you have access to a right lender, which we do. Okay, isn't it amazing? It's all about leveraging. The more leverage you are able to obtain using a good debt, 30-year mortgage, get a lender to finance something like this. This property is appraisable very nicely and is completely renovated, rehab with a tenant in place. Is that amazing? Another property, great cash flow. So in the Midwest again, could be anywhere in the Midwest is quite large. But if you surround yourself with a good team, good turnkey provider, this kind of property will make you very wealthy over time. Okay, so it's long term. So this is a single family home, is a resale home, quite old again. It has been renovated and rehab, tenant in place, so turnkey, ready to go. Property management available to help you invest. Doesn't matter you're 2,000 miles away, 10,000 miles away. It does not matter. You could, as a risk investor, if you have a lot of financial resources, you can scale your portfolio. You can buy multiple homes over time. It's a long-term buy and hold. This is not a get-rich-quick scheme, but look at this, $84,000 single-family home. It rents for $1,200. Is it amazing? You know what's the rent value ratio? 1.4%. Capitalization rate, a whopping 12% cap rate. Cash on cash return of 18%. This is and total return on investment only in the first year at 30% based on modest appreciation projection, 3%. So multiple ways to make money. And this is a pure cash cow. Look at this. Monthly cash flow is almost $400. And you're getting a mortgage of 7.5% 30-year fixed. Once again, I hate to repeat myself, but you take the interest rate, marry the rental property, marry the house. Next few years, when the interest rate goes down to 6%, 5.5%, 5%, whatever, you could easily cash out, refinance this property. And guess what? If you can refinance the property from 7.5% right now to 5.5% 30-year fixed rate, what's the estimated cash flow? Right now, it's sitting at $400. I'm going to guess it'll be probably $650 monthly net cash flow. This is insane. This is mind-boggling. What other words I can put? This is screaming deal. I am at a loss. All right, so let's continue with another property. Let's talking again. I recommend for mom and pop investors, scale your portfolio from 1 to 4 units. Single family home residential investing, a duplex, fourplex. From time to time, you get hired in the fourplex, but you have to go to the right market, the right neighborhood, the right whatever, right? And which is not easy. Anyway, but here we go. This is a fourplex in the Midwest, all renovated, all turnkey, fixed up, renters already. It's quite old, but the bones are very nice. These fourplex, these are only $249,000. You put 25% down payment, your total out of pocket is $62,250 plus closing costs $5,000 estimation. A little bit less than $70,000 out of pocket. You're able to buy 249 fourplex, even at 7.5% mortgage interest rate. At the end of the day, you can still cash flow at whopping $540. That is a cash cow back in 1.4% rent value ratio. Anytime you have a 1%, that's really a great metric, but you exceeded the benchmark of rent value ratio of 1%, which is 1.4%. Look at the cap rate, almost 9% capitalization rate. The benchmark is 5%. Cash on cash return 9%. Total ROI 23%. All this in the first year. 540. You can cash out refinance at 5%, 5.5%, or 6%. A few years later, when the rates come down, hopefully, we don't know. I can't predict the future. Guess what? Guess what the cash flow is going to be? Right now, it's 540 based on 7.5% interest rate for investor. If you refinance at 5.5%, down the road somewhere, I'm just using projection. I don't have a crystal ball. This 540 net monthly cash flow could become what? $750, $800 monthly net cash flow, this is mind-boggling. And we haven't even talked about the appreciation potential down the road, second, third, fourth, fifth year, and the tax benefit, and the leveraging, the whole 9 yards. Great value for fourplex at such a low price, with property management in place, et cetera, et cetera, et cetera. And then I don't speak too often about multi-units at sixplex. This is a sixplex, turnkey, renovated, managed by a property manager. You can do remotely and from far away, passively, and let the property management do all the work for you over time, not just today. Totally rehab. I mean, nothing out of your pocket other than the purchase price. Sixplex, 6 doors at a price of $354. I mean, this is all I can say is it's a great value. I don't know what else to say. For your experienced investors, you know what I'm talking about. How can you find a sixplex renovated or rehab with tenants in place most of the time, with only $354, even at a 7.5% interest rate, 25% down? Your total out of pocket a little bit less than 100 grand, and you're renting for $4 grand. Each door rents for $1,000. A $4,000 monthly gross rent based on a price of $354. Look at the rent value ratio of 1.1%, capitalization rate almost 8%. This is insane. This is unheard of. Challenge me. What other market can you find something like this? Anyway, you go over the debt service. I'm not going to go over the debt service too much. And then at the end of the day, even with your mortgage payment of almost $1,900 at 7.5%, this is your debt service. This is your monthly expenses. So at the end of the day, the $4,000 gross rent minus your monthly debt service. At the end of the month, you can achieve a approximately monthly cash flow of $400. Again, if you can refinance this loan to projected 5.5%, these $400 monthly net cash flow you're getting right now could increase to around, don't quote me on it, around $650, maybe even $700. Okay, so, and let me see what else. I think that's it. Oh my gosh, isn't that enough? I think so. So at the end of the day, you need to ignore all the doom and gloom, negative headlines, all the fear porn out there. You know what I mean by fear porn? FEAR -PORN. All the YouTube channels, they want clickbait. They talk negativity. They talk about crash and this, or all the negative. The news media, they love to sell negative news, and they make it as if no one should buy properties or house now, whether you are a primary homeowner or real estate investor. So that is what you're going up against. You are going up against so much negativity out there that can really paralyze you. But if you are a sophisticated investor, even if you're a newbie, if you find this turnkey system, the way I described to you, I mean, there are many markets in the country. They're not crashing. They're not having a correction. They are recession proof. They are foolproof, whatever proof. Okay, so at the end of the day, people need to live somewhere, and as I stated, the rental market is at a historical high. This means so many people renting. Right now is a great opportunity to become a landlord investor, so you can take advantage of this unique time in your life, so you can become a very good, successful long-term investor using the portfolio I just described to you. So hopefully this helped with you, and hopefully this message I'm providing you will motivate you to take action and to become a very good long-term investor using the methodology I just shared that with you. So if you, again, as I stated, if you see a lot of value on this presentation, please smash the like button and subscribe to my YouTube channel, while the rest of you can also just look at my website at the bottom of this video and go ahead and sign up for a free newsletter. And after you sign up, you will receive free weekly newsletter about real estate investing on the strategies I just shared with you. All right, so thank you so much for attending. This is Siwin Yi, and I will see you on the next video. Have a nice day. Bye-bye.